Okay, so wow, you really went all out, huh? This is like a whole semester's worth of reading on digital currencies and CBDCs. You've got the Federal Reserve discussion paper there, and this cashless economy paper, too. Looks like you're really trying to understand this whole digital money thing, especially with a potential US CBDC on the horizon.
Yeah.
I mean, it's a lot to unpack for sure.
It is, yeah, and it's pretty fascinating how most of our money already exists digitally.
Right. Like even now.
Yeah, but it's mainly held by those commercial banks, you know?
Yeah.
So that brings up a lot of interesting questions about risk and stability as we potentially move towards a future that's even more digital.
You're spot on, and these sources really highlight that shift happening. It's like we're seeing the rise of non-bank money, things like Venmo and PayPal that we use all the time. And then on top of that, you've got the Fed launching FedNow this year,
Right.
which is supposed to completely change how we do payments with those 2027 real-time transactions.
Yeah.
It's exciting stuff, but it also makes you think, what happens if everyone just decides to move their money out of those traditional banks and into these less regulated platforms?
That's the million-dollar question, isn't it? I mean, the potential for some kind of systemic risk is definitely something to watch closely.
For sure.
What if a major non-bank player goes belly up or there's like a sudden run on these types of assets? I mean, it's a real balancing act trying to figure out how we can have innovation but keep things stable too.
And speaking of innovation, we can't forget about cryptocurrency. It's everywhere you look these days.
It is. It really is.
But our sources are also quick to point out some of the, let's just say, the realities of the crypto world.
Yeah, I think it's really crucial to separate the hype from the facts. You know, blockchain technology is definitely groundbreaking.
Oh, absolutely.
But cryptocurrencies themselves, well, they have a bit of a reputation for being volatile.
To put it mildly.
Yeah. And then there's the energy consumption that comes with mining certain cryptos. That's becoming a bigger and bigger concern too.
Right. And we can't forget about the potential for fraud and the risk that people could lose their entire investment with like one wrong click. It's kind of like the Wild West out there in some ways.
It is.
But then you have stablecoins, which are trying to fix the volatility problem by pegging their value to something more stable like the US dollar.
Right.
But even stablecoins have their own set of risks, don't they?
That's right. I mean, the President's Working Group report actually raises some pretty serious concerns about stablecoins.
Oh, really? Like what?
Well, one of the biggest worries is the possibility of runs. Like, imagine if everyone suddenly tried to redeem their stablecoins for actual dollars. I mean, it could cause the whole stablecoin system to collapse.
Yeah.
And then there's the whole question of economic power.
Right.
Could stablecoins lead to even more power being concentrated in the hands of just a few big players?
Yeah.
It's a real regulatory minefield.
Yeah, for sure.
Right.
Which is why we're seeing this push for tougher regulations in the crypto space. It feels like everyone's scrambling to figure out how to balance the potential benefits with these very real risks.
Absolutely. And this whole debate about crypto and what role it'll play in the future of finance is a big part of why the conversation about CBDCs is so important right now.
Okay, so let's talk about the elephant in the room, CBDCs.
Hmm.
What are they exactly, and why is the Fed even thinking about one in the first place?
Well, it all boils down to trying to build a more stable and secure foundation for this digital economy we're living in.
Okay.
The source we have here defines a CBDC as a digital liability of the Federal Reserve available to the general public. So basically, it's like having digital dollar bills, but they're backed directly by the central bank, not by a commercial bank.
So how is that different from the digital money we already have sitting in our bank accounts? Isn't that already backed by the Fed in some way?
Yeah, but not in the same way. The digital money we use right now is a liability of those commercial banks. They owe us those dollars. But a CBDC would be a direct liability of the Fed, similar to physical cash, but in digital form.
Okay.
It's a subtle difference, but it's important. It has some big implications for how safe and stable the whole system is.
So it's like the Fed is saying, hey, we're going to create this digital version of cash that's just as safe and reliable as the paper money in your wallet, but it's all going to exist in the digital world. It's kind of mind-blowing.
It is. And the Fed is looking at some very specific features for a potential U.S. CBDC. They want to make sure it's secure, but also user-friendly, you know, things like privacy protection,
Yeah.
making sure it's easily transferable, and keeping it intermediated.
Hold on, intermediated. I thought the whole point of a CBDC was to cut out the middleman.
That's a common misconception. The Fed isn't trying to become everyone's bank. You see, this intermediated model would still let private sector institutions handle the day-to-day stuff like managing CBDC accounts. The Fed would just be providing the underlying currency, the CBDC itself.
Gotcha. So it's not about replacing our current financial system, but about evolving it. adding this new layer of digital cash that's backed by the full faith and credit of the U.S. government.
That's a pretty big deal.
It is, and it has the potential to fix some of the big problems we have in the system right now.
Like what? Well, think about cross-border payments. Sending money overseas is a slow and expensive process right now.
Oh, tell me about it.
But a CBDC could streamline those transactions, make them faster, cheaper, and easier for everyone.
That would be huge for businesses, but also for people sending money to family in other countries.
Exactly.
The source even mentions reducing global inequality as a potential benefit.
Yeah.
Lower remittance costs could mean more money actually reaches families in developing countries. It's pretty amazing to think about the impact this could have on a global scale.
Absolutely. And then there's the whole issue of financial inclusion. Millions of Americans still rely on expensive alternatives like check cashing services because they don't have access to traditional banking. A CBDC could help bridge that gap, give people a more affordable and accessible way to participate in the financial system.
That's a powerful argument. It's like we're talking about a whole new level of financial empowerment, not just for individuals, but for whole communities. But I have a feeling there's got to be more to this story.
Yeah.
There must be some downsides to all of this, right?
Of course. While there's a lot of excitement around the potential benefits of a CBDC, we have to be realistic about the risks and challenges, too. And that's exactly what we'll be digging into in our next segment.
All right, listeners, we're about to dive into the potential downsides of a CBDC. You won't want to miss this. So we just spent some time talking about how a CBDC could really shake things up in the financial world. Maybe even help those who haven't had access to traditional banking. But like any big change, there are some worries, right? What are some of the downsides we need to be thinking about?
Oh, absolutely. CBDCs are powerful tools, but they're not a magic bullet. You know, one of the big concerns is what could happen to the structure of our financial markets, especially when it comes to banks.
Okay.
So banks use the money we deposit to make loans, right?
Right. That's how businesses grow and people buy houses.
Exactly. But what if everyone suddenly decides to move their money from those bank accounts to CBDC instead?
Yeah, that would be a huge blow to the bank's ability to lend money, wouldn't it?
It-
And that could mean that loans become more expensive or even harder to get. That doesn't sound good for the economy.
Right. And it's something the Fed is looking at very closely. There's also the whole question of how stable the financial system would be during a crisis. You know, we've all heard of bank runs, those times when everyone panics and tries to pull their money out all at once.
Yeah, not exactly a recipe for stability.
Nope. And that instinct to run to safety could be even stronger with a CBDC.
How so?
Well, if people see a CBDC as like the ultimate safe haven, they might start pulling their money out of banks at the first sign of trouble. And that could actually make a crisis even worse.
So a CBDC could make the system riskier in some situations. That's a scary thought.
It's definitely something to consider. And then things get even more complicated when we start talking about monetary policy. The Fed uses interest rates to try and manage inflation and keep the economy running smoothly.
Right.
But with a CBDC in the mix, especially if it pays interest, things can get a little messy.
Okay, help me understand that. How does a CBDC paying interest mess with what the Fed is trying to do?
Well, imagine people constantly moving their money back and forth between bank accounts and their CBDC holdings, always trying to chase the highest interest rate.
I see.
It would be like trying to steer a boat in a hurricane. The Fed's actions would be less predictable and less effective.
So a CBDC could make the Fed's job a lot harder. Maybe even affect the interest rates we all rely on for things like mortgages, loans, and savings.
Exactly. And it could limit their ability to respond to sudden economic shocks, which could ripple through the entire system.
We've talked a lot about the economic side of things, but what about privacy? I know the Fed has said that privacy protection is a key feature. But how do you balance that with the need to stop illegal activities?
It's a tough balancing act. You want to protect people's financial information, but you also don't want to create a system that criminals can easily abuse.
Right.
You know, complete anonymity would be a disaster, but too much surveillance would erode public trust. So the Fed is exploring ways to find a middle ground, maybe using techniques like selective disclosure, where certain information is only revealed when it's absolutely necessary for security reasons.
So it's about finding that sweet spot between protecting people's privacy and making sure the financial system stays healthy.
Exactly. And even if we can figure all that out, there's still the question of how to actually make it all work. Putting a CBDC in place in a country as big and complex as the US is a huge job.
It really is. The cashless economy source goes into this in a lot of detail, and it's fascinating. I mean, think about all the infrastructure you'd need. You need the technology, secure systems, clear regulations, and a way to educate consumers.
It's like building a whole new financial highway system basically from scratch.
Yeah, that's a good way to put it. And then you have to get consumers to actually use it.
Right. People need to trust this new form of money, understand how it works, and feel confident that it's safe and reliable.
You can't just launch a CBDC and expect everyone to jump on board overnight. It's going to take time, education, and a lot of careful planning.
Absolutely. And while other countries like Sweden and China have made progress with their own CBDCs, the US is a different animal. We have a much bigger and more complicated financial system, so the stakes are a lot higher.
And we can't forget about the politics involved. Getting everyone on board, from lawmakers to banks to everyday people, isn't going to be easy.
You're right. It's not just about technology. It's about navigating a whole web of interests, ideologies, and competing visions for what the future of money should look like.
Yeah, that makes sense. So it sounds like the question isn't really if a CBDC will happen, but more like when and how, with all these different factors at play.
Exactly. And understanding those factors, weighing the pros and cons, is crucial for anyone who wants to be part of this conversation.
Okay, so we've talked about the potential downsides, the complexities, the sheer scale of what we're talking about. It's a lot to take in. But before we get too lost in the weeds, let's try to bring this down to earth for a minute. What would a future with a CBDC actually look like for the average person? That's what we'll be exploring in our next segment, so stick with us. Okay, so we've spent the last couple segments really digging deep into CBDCs. What the potential benefits, the very real concerns. I mean, it's been a lot.
It has.
But let's shift gears a little bit. Let's imagine that the U.S. actually goes ahead and launches a CBDC.
Okay.
What would that look like for you and me in our everyday lives?
It's a great question, and that's where things start to get really interesting. Let's say this hypothetical CBDC is called the digital dollar.
Right.
And it exists alongside the physical cash and the bank accounts we already use.
So I'm picturing an app on my phone, like right next to my banking apps, and Venmo, the digital dollar app.
Exactly. Now, let's say you want to send money to a friend who uses a different bank.
Okay.
Right now, that can be a pain.
It can be.
ACH transfers waiting for checks to clear, it's not exactly the most efficient system.
You're telling me. Especially when you just want to split a dinner bill or pay someone back quickly.
Right. With the digital dollar, it's as easy as sending a text message. The money moves instantly and directly between your accounts. No fees, no waiting.
Okay, now that's something I can get behind. What about when you're traveling abroad? Usually exchanging currency means getting hit with all those crazy fees and terrible exchange rates. Would a CBDC change that?
Let's say you're visiting a country that also has its own CBDC.
Okay.
You could open your digital dollar app and convert your holdings directly into their digital currency.
Right in the app?
Yep, at a competitive exchange rate.
So no more running around the airport trying to find a decent exchange place.
Yeah, like it.
But what if you're somewhere without internet access? Like a really remote area? Would you be out of luck?
Not necessarily. If the digital dollar is designed with offline capabilities, and the Fed is definitely considering that, then you could still make payments at businesses that are equipped for offline transactions too.
It's kind of like digital cash.
It is. You get the security and convenience of digital money, but with the resilience of physical cash.
That would be a game changer, especially in emergencies or for people who don't have reliable internet access. That's combining the best of both worlds.
Exactly. But we're just scratching the surface here. One of the most exciting possibilities is something called programmable money.
Okay, now you're speaking my language. Programmable money. What is that?
It's like setting up rules for how your money behaves. Like you could have your rent paid automatically as soon as your paycheck hits your account.
Yeah, okay.
Or you could set limits on how much you can spend in certain categories to help you budget.
So it's like having a personal finance assistant built right into the money itself.
That's a great way to put it. And it could open up a whole world of possibilities for things like micropayments.
Micropayment?
Yeah, like imagine paying tiny fractions of a cent to access specific online content, like articles or music or even just parts of an ebook.
So instead of paying for a whole subscription, even if you only use a small part of it, you could just pay as you go for exactly what you use.
Exactly. It could disrupt a lot of industries in a good way. And these are just a few examples of how a CBDC could change the way we use and think about money.
It's a pretty exciting vision of the future. We can't forget about all those concerns we talked about earlier, right?
Right.
The impact on banks, the challenges for monetary policy, the importance of protecting everyone's privacy.
Absolutely. Those are complex issues and there are no easy answers. That's why the Fed is taking this slow and carefully looking at every angle before they make any decisions.
So as we wrap up this deep dive, what's the one thing our listeners should take away from all of this? What should they be thinking about as this conversation about CBDCs keeps going?
I think the most important thing is to stay informed. The future of money is being shaped right now, and a CBDC could have a huge impact on all of us. So read up on it, ask questions, and figure out where you stand. What kind of financial future do you want to see?
That's a great question. And on that note, if you were in charge of designing a US CBDC, what would your top priority be? What features would matter most to you? Let us know. We'd love to hear from you.
And that's all the time we have for today's deep dive.
Thanks for listening, everyone.
We hope you found this exploration helpful and maybe even got you thinking about the future of money in new ways.
Until next time, keep diving deep.